The Fed, the fourth power of the United States. When people think of power in the United States, they often think of the three traditional branches of government: the executive, legislative, and judicial. Yet there exists another institution that, while not officially part of the government, holds immense influence over the nation's economy: the Federal Reserve System, or simply, the Fed. Many economists and political observers have called it the fourth power of the United States. The birth of the Fed was established in 1913, after a series of devastating financial panics exposed the weaknesses of the U.S. banking system. The most severe, the Panic of 1907, led to widespread bank failures and economic chaos. To prevent such crises from recurring, Congress created a central bank, designed to ensure financial stability and act as a lender of last resort. Unlike traditional government agencies, the Fed was built as a hybrid entity, independent from direct political control yet accountable to Congress. This design aimed to keep monetary policy free from short-term political pressures while maintaining democratic oversight. As structure and operation, the Federal Reserve System consists of three main components: the Board of Governors, based in Washington, D.C., which sets key policies and regulations; 12 regional Federal Reserve banks across the country, which carry out operations and provide financial services; the Federal Open Market Committee, FOMC, the Fed's most powerful arm, responsible for setting interest rates and guiding monetary policy. This structure allows the Fed to gather data from every corner of the nation and make decisions based on both local and national economic conditions. The power to move markets. The Fed's ability to set interest rates gives it extraordinary power. When the Fed raises rates, borrowing becomes more expensive, slowing down spending and inflation. When it cuts rates, credit flows more easily, stimulating growth. Because the US dollar is the world's reserve currency, these decisions ripple through global financial markets. A single sentence from the Fed chair, whether it's Alan Greenspan in the 1990s, Ben Bernanke during the 2008 crisis, or Jerome Powell today, can send stock markets soaring or plunging. Investors, governments, and businesses worldwide listen closely to every word the Fed says. Independence and controversy. The Fed's independence is both its strength and its greatest source of controversy. Supporters argue that keeping monetary policy free from politics prevents reckless decisions driven by election cycles. Critics, however, claim that this independence gives too much unelected power to a small group of technocrats. Over the years, the Fed has faced political pressure from presidents who wanted looser monetary policy to boost growth before elections. Yet the institution has largely resisted such influence, emphasizing its dual mandate to promote. The Fed's independence is both its strength and its greatest source of controversy. Supporters argue that keeping monetary policy free from politics prevents reckless decisions driven by election cycles. Critics, however, claim that this independence gives too much unelected power to a small group of technocrats. Over the years, the Fed has faced political pressure from presidents who wanted looser monetary policy to boost growth before elections. Yet the institution has largely resisted such influence, emphasizing its dual mandate to promote maximum employment and stable prices. Still, critics question whether the Fed's policies, such as quantitative easing, QE, after 2008 and near zero interest rates, have widened inequality and inflated asset bubbles. These debates show that while the Fed may operate in the background, its decisions shape the economic lives of millions. The Fed's global role. Because the US dollar anchors the international financial system, the Fed's actions reach far beyond American borders. When the Fed tightens policy, capital often flows out of emerging markets, weakening their currencies and increasing debt burdens. In this way, the Fed's choices can trigger global waves of growth or recession, even in countries with no vote in its meetings. Conclusion. The Federal Reserve's power lies not in making laws or commanding armies but in controlling money, the lifeblood of the modern economy. Its independence, influence, and impact on global finance make it more than a national institution. It is a global force. In many ways, the Fed truly is the fourth power of the United States, one that governs not by decree, but by interest rates, expectations, and trust. Would you like me to create a Vietnamese translation or a formatted version for posting blog next?